How's everybody doing? My name is Kurt Friedrich, and welcome to episode 44 of TNT Stocks. Today's actual date is March 1st of 2026, and the simulated date is August 1st of 2028. We've had some, if you couldn't tell from the thumbnail, we've had some big moves since the last episode. So before we get into all that and unpack the slides, let's go ahead and get into our disclaimer and our criteria and disclaimer, and then start unpacking what has happened since the last episode. All right, so criteria. We do one video per week. We'll simulate 1 month. I'll create videos when available at home, not while traveling on Army Reserve duty or vacations. Any week with a missed video will not be considered a simulated month. Each video will simulate loading $100 per month to the TNT Stocks account. All stocks bought in the simulation are actual companies with their actual end-of-week closing stock prices. Stocks can be sold between episodes at certain prices per personal strategies. This month, we bought 3 stocks with a price range of $5 to $100, spending capped at $230. So let us see what $100 per month will look like over time. All right, disclaimer. These videos are for entertainment purposes only. I am not qualified or certified to give professional investment advice. Day trading has high risks involved. Any gain or loss is at a personal risk. Past performances do not guarantee success in future stock purchases. It is highly recommended that you do your own due diligence when it comes to deciding which stock you will purchase. All right, let's go ahead and get into it. Well, first off, and always, I do separate our line items into 2 different slides because we have so many different line items. When you include the legend, I feel like the line items are going to be condensed and small, blurry, and hard to see depending on what type of monitor, cell phone, tablet, laptop you're using to watch these videos. So I try to split it up to make it a little bit easier to read the key highlights that I'm showing here. So with that being said, let's go ahead and start getting into it. And as always, as it's been for many episodes, AGL still continues to be our highest money loser. However, it has been making a little bit of a resurgence. I think within the last few episodes, it was down into the 40 cents per share. So I know several episodes, or at least before I left for Army Reserve training and had a break, we were in the 50s. Got as high as over $1 at one point in time. I don't know if that was illustrated on one of the episodes, but I know from following it, it did get pretty high. So nice to see a little bit of a resurgence, but still our top money loser and still the eyesore. But this is, of course, as I've said in previous episodes, if you've watched those, this is per an old strategy that I was using that did not work out. And unfortunately, our 2 oldest line items in our portfolio are our top money losers. But it is what it is until either they recover or something else changes with them. Basically, it's really boils down to the platform that I use. They charge a 10% commission if you buy anything under $2, which my understanding is anything under $2 is considered penny stocks. I have not sold anything under $2 with that platform, so I don't know if they charge a 10% commission when you're selling something, but basically, I'm waiting for it to come up over $2. Pretty much when it does that, I'm gonna probably, well, as of right now, I'm going to say that I'm gonna drop it. But of course, if it ever gets to that point, and if it continues to recover, we'll see. Because as you can see, at one point in time, it was $5.68 when we bought it, all the way back April of last year, real time. All right, so moving on from the eyesore. SHIP, Seanergy Maritime Holding Corporation, still our highest money maker. If we sold that at closing on Friday at closing, we would have had a gain of $113. So if you all purchased some of that back in December, hopefully you are benefiting from that purchase with SHIP. We did sell HCC 4 shares at $84.60. Took a hit of about $18 with this sale. This was really disappointed. I really hated seeing this go because this was purchased February 6th, real time, and this was when we did this episode coming back from Army Reserve. We training and after the long break, that was like our highest capped purchases amount, and I was really hopeful that those three companies that we bought in that episode would really show something there. So far, so this is the second of the three that we sold. The first one, I can't remember the name of the company, but I do remember that we sold it at about $30, or took a hit at about $30. This one we're taking a hit at about $17. Just rounded off. So with those three, we've taken a hit at about $50, but SBLK still holding strong. You see right above there, it's pretty much given us a net positive for those purchases in that episode. But with that being our highest spending cap, I was really hopeful that they would increase percentage-wise more than what they have. So that's unfortunate to see, but hey, it is what it is. We'll get up to that spending cap again sometime as our portfolio increases, and one of those times we'll see something that is doing well, like SHIP or like BKD or BTSG, and we'll just keep playing the game until that time comes. All right, next slide. You see here METC. We let that company go, selling 10 shares at $16.29, and took a hit of about $2. So those are two companies we sold since last episode. So we did take an overall loss in our income in this episode, but nonetheless, as you could tell from the thumbnail, the bottom line is our over-under has increased. But before we get too far ahead of ourselves, what we did purchase this week, TEN, Sascos Energy Navigation Limited, 6 shares at $35.30. PBF Energy Incorporation, 6 shares at $35.60. And CSX Corporation, 5 shares at $42.69. So hopefully over the next week, those do pretty well. We can benefit from that purchase. Overall in our portfolio, we have 191 shares before we removed the ones that we did sell. And our over-under gain is $650, which will bring us to our next slide. So here we continue to move. We got now a 4 episode streak of moving in the right direction, which is really cool to see. This over-under is just really blowing away the previous high, which was here in this November month of last year. Looking at my notes, $289. So we have really more, as you can see, we've more than doubled that. So that just really goes to show the strength of our portfolio, how well we're doing, how well we're moving in the right direction. And when it does come to selling some of those line items that are doing really good, we are going to pocket a decent amount of cash or really increase those slides, which we'll go ahead and hit next. So our income did take a hit, as I mentioned, by selling those two companies that had overall negatives. We did drop from about $110 to $90, so about a $20 hit here. As you can see, this graph here really seems to, I mean, it's about as jagged as a saw here. Moves up, then down, moves up, then down, but overall, in the past several episodes, you can see here it's got an upward trend. So we're really making some gains, really moving in the right direction. So that's really cool to see, and I expect that well, based off the previous slide, you can tell that it's going to continue to move in the right direction in the upward way. But still kind of interested to note that it's moves up, down a little bit. So it's like we take 1 step back and then 2 steps forward. So that's cool to see, and we'll keep it up. All right, the next slide is our take home. Basically, what this is anytime we sell a company which has a positive gain to it, we're going to take home half of that and then reinvest the other half of it. Since we didn't sell anything that did have a positive gain to it, we didn't have any take home, which, as you can see here, the trend seems to be like every other episode. We do take home some. This will always be moving in the upward direction, just because of the nature of the slide and the method. It will never move down. Um, but you can see how over the last several episodes, well, July of last year to now July, it's really starting to have a curve in the upward direction, which is definitely what we want to see. Here's our invested slide. Basically, this is just what if you take all of our shares and multiply them by what we purchased them at, this is what we have. So we basically jumped from $3,500 to about $3,620. Um, this slide will always be moving in the upward direction. Well, not always. You can see a couple times it's moved in the lower downward direction, which is just kind of the way that I do the purchases based off what's capped. Sometimes things don't purchase on the low end of the cap, um, but typically speaking, it's going to trend in the upward direction. And now here's our total amount. This is pretty much what we have in our portfolio. If you took everything that we purchased and all the shares that we purchased and multiply them by the closing prices, this is what this represents. So we pretty much went from about $4,100 about $4,200, which is typical. Really want to see a curve in the upward direction, but just haven't been seeing it right now. I am having to do a little bit of tweaking to this curve to make some corrections. So I don't know how that's going to affect it in future episodes. Because I did find an error in my math calculation. So as I move forward, I'm making a little bit of corrections to it. But if this ever moves in a downward direction, then that's really really bad. We don't ever want to see that. That means the market is doing really bad. Which we'll kind of touch base on that at the very end. Here's our first combined slide, combining our over-under income and take-home. This is pretty much kind of showing how these are all the different pieces are moving together. You see our over-under is really just taken off. And when we do sell some of those stocks that have a high dollar amount, that over-under is going to come down, and it's going to come back down to about the income and take-home. But I really want to see that income come back up and really catch. I don't think it'll ever catch the take-home, just because sometimes when you sell companies, you're going to take some losses. It just kind of is what it is. But either way, this is kind of the correlation and showing how these different graphs are moving together, and really kind of shows how they've in the last several bunch of episodes, they've really kind of been moving in the right direction. So our strategy since July of last year, real time, has been working out pretty well. And I think this illustrates it, or at least moving in the right direction. Here's our second combined slide. Invested in total together. These are always going to kind of start separating a little bit, as you can see. They'll typically run parallel, but as time goes along, we definitely want to see more and more separation. And I'll illustrate how what we purchased versus what we are gaining is going to show that separation. So cool to see how that separation has grown over time. All right, and here's now our portfolio as it looks now. I've removed the legend and removed the companies that we did sell. So overall, we have now 177 shares in our portfolio. If we did sell on Monday morning, we would have an overall gain of about $675 that we've put in our pocket. So I think that's a pretty good percentage overall. We talk about $4,000 that we've had invested in $700 compared to that. I think that's pretty good. It's a pretty good percentage. pretty pleased with that. Some key notes here. Just point out that, yeah, I think this is pretty cool. Just looking at this, out of all the line items, not including our eyesores there at the top, out of all of our line items, we only have only one that is in the negative. All the other line items are in the positives. We got a 90s, a 50s, a 100s, another 80s. How many do we have above 50? 1, 2, 3, 4, 5. 5 line items above 50%. So pretty cool to see. And as I talked about a few slides ago with the market taking a deep hit, if any of you have been watching the news real time, you know that there's some stuff going on in the Middle East with U.S. Israel against Iran. It's going to be interesting to see how that affects the market come Monday. I'll be honest with you, I really don't know which direction it's going to go, but I do think it's going to take a big swing one way or the other. So I'll be honest, I'm nervous about it. The companies we just purchased, we either may take some big hits with that, and some of these that we have some pretty big gains with, we may be letting them go. The next episode may be a big sell-off, but you never know. The next episode may be showing more gains than what we currently have. So the only way we'll find out is wait for the time to pass between now and the next episode, and share it, and show it, and talk about it. So until then, good stock hunting. Don't forget to comment, rate, share, and subscribe. And until the next episode, take it easy.